Wolfe, Leonard is the president and CEO and chairman of the board of the United Bank and Trust in Marysville, Kansas. I have to add, home of the famous black squirrel. I know that this is the home of the famous black squirrel because some gentleman dresses up as a black squirrel.
It's not me.
I know that.
Okay.
But he tapped me on my back, and I turned around to discover a life-size black squirrel. I hope that the EPA and Fish and Game folks in the Interior will not list them as being endangered. United Bank and Trust is a $600 million agriculture bank with 15 branches in 9 Northeast Kansas communities. Leonard's the past chairman of the Kansas Bankers Association, currently serves as chairman of the American Bankers Association Agriculture Lending Task Force, no small task. A graduate of Southwestern College in Winfield, Kansas, Mr. Wolfe began his banking career in 1979. First became president and CEO of a bank at the young age of 28. Leonard, I really appreciate your being here and representing our great state. Thank you again to the witnesses for appearing. And basically, we will rotate back and forth. So, Leonard, why don't you proceed?
Thank you, sir. Chairman Roberts, Ranking Member Stabenow, and members of the committee, my name is Leonard Wolfe. I am the President, CEO, Chairman of the Board for United Bank and Trust in Marysville, Kansas. We are the largest commercial agricultural lender in Kansas, second only to the Farm Credit System. I appreciate the opportunity to present the views of the ABA on credit conditions and availability in rural America. The topic of today's hearing is very timely. While farm and ranch incomes over the past 5 years have been some of the best in history, there is no question that agriculture economy is slowing. Despite this, the banking industry is well positioned to meet the needs of U.S. farmers and ranchers. Interest rates continue to be near historic lows. The banks have the people, capital, and liquidity to help America's farmers and ranchers manage through any turbulence in the economy. Importantly, with the Farm Bill in place, farmers, ranchers, and their bankers have certainty from Washington about future agricultural policy. In 2015, farm banks, defined as any bank with more than 15.5% of their loans made to farmers or ranchers, now provide over $100 billion in total farm loans. Small farmers rely particularly on banks for funding. Farm banks hold $48 billion in small farm loans, with $11.5 billion of that in micro-small farm loans. Farm banks are healthy and continue to be forward-looking, growing capital and increasing reserves. This provides flexibility to serve our nation's farmers and manage risk associated with any downturn in the agricultural sector. I would like to thank Congress and especially the agricultural committees for repealing the borrower term limits on USDA Farm Service Agency guaranteed loans in the last Farm Bill. Banks work closely with the USDA to make additional credit available by utilizing guaranteed farm loan programs. On the subject of USDA guaranteed farm loan programs, I believe that Congress needs to consider reforms to the programs, specifically to raise the cap on these loans due to the rising cost of agriculture, along with the modernizing of the programs. The USDA Farm Service Agency guaranteed loans have allowed farmers to continue to access credit from banks like mine as they grow, ensuring credit access for farmers across the country. We remain concerned, however, with one area of the agricultural credit market, the Farm Credit System. Over the years, the Farm Credit System has veered away from its intended mission and now represents an unwarranted risk to taxpayers. As a government-sponsored enterprise, it represents a risk to taxpayers in the same way that Fannie Mae and Freddie Mac do. The Farm Credit System was founded in 1916 to ensure that young, beginning and small farmers and ranchers had access to credit. However, that is not its focus today. The Farm Credit System has grown into an enormous $304 billion system offering complex financial services. To put this into perspective, the Farm Credit System, If the Farm Credit System were a bank, it would be the 9th largest bank in the United States, and it is larger than 99.9% of the banks in this country. The Farm Credit System benefits from significant tax breaks, valued at $1.3 billion in 2015, giving it a significant edge over private sector competitors. Moreover, the Farm Credit System enjoys government backing, formalized by the creation of a $10 billion line of credit with the U.S. Treasury in 2013. It is shocking that nearly half of the entire Farm Credit System's portfolio is to individuals that each owe more than $1 million. These are not young, beginning and small farmers and ranchers. The system now primarily serves large, established organizations that do not need subsidized credit. It is clear that the Farm Credit System has become too large and unfocused, using taxpayer dollars to subsidize large borrowers. We urge Congress to perform an autopsy on the system to ensure that their charter of helping young, beginning and small farmers is being followed. If it is not, we urge Congress to remove the significant tax break provided to the system. Banks like mine are proud of the work we do to support our nation's farmers and ranchers. The agricultural community is a critical part of our economy, and America's banks remain committed to serve it through good times and bad. Thank you, and I'd be happy to answer any questions.